Last week, the S&P 500 breached the previous all-time high on three occasions: Tuesday, Wednesday, and Friday. And out of these three, only Friday is important. Why? Because only on Friday, the S&P 500 managed to close above the previous all-time high. This is why the Friday's closing is very important and is going to trigger more bullishness in the S&P 500, and we can expect the 7,000 as early as in the coming week. And if the technicals fail, then comes the earnings, because the next week from January 13th, the earnings season will start, and JP Morgan will post the earnings on Tuesday. So the stock market is going to get the help from the banks, because in the next week only the banks will release the earnings. The only problem to the S&P 500, Dow Jones, and the entire US stock market is Tuesday, because on Tuesday the inflation data will be released. And if this data goes against the stock market, against the Wall Street, then this can restrict the bullish movement towards 7,000, and S&P 500 will remain within the 6,900 range. Otherwise, S&P 500 is going to get the help from earnings, from the technicals and everything else, and is in a condition to try for the 7,000 in the coming week. And technically, the only condition for the S&P 500 to try for the 7,000 is to sustain on the hourly closing basis, 4-hourly closing basis, and the daily closing basis above my level, strong resistance level of 695x. This is why repeatedly in all of my updates, I have repeatedly mentioned that 695x, without the help or without fulfilling the condition to the 695x, S&P 500 will not be able to move towards the 7,000. That is not possible at all. And the best example you can see here on Wednesday, when the S&P 500 moved up, made an all-time high on Wednesday like 6,965. Then intraday it came down. Why it came down? There were two conditions. First was the Dow Jones. Okay. Second was the 695x. And in my pre-market analysis also on 7th of January, I mentioned that there is an unfulfilled obligation in the Dow Jones, because Dow Jones on 6th of January moved up, breached the heavy resistance level, disrespected the heavy resistance level. So it was clear that the Dow Jones is in a condition to trade red for the entire day. And because Dow Jones will trade red, S&P 500 will face pressure. And secondly, the 695x is in the S&P 500. This condition will not be fulfilled because of the Dow Jones. That is why for the entire day we were expecting red and the bearish movement. Now, how the S&P 500 is going to trade in the bull side or in the bearish side in the next week, what will trigger the bullish condition, what will trigger the bearish movement or the fall, or if it will enter into the consolidation, all of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of January 12th. Means from January 12th, which is Monday, to January 16th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First part is the technical part. In the technical part, through the technicals, I will show you the movement, the momentum, and the long term and the short term trend. Second part is the probable movement. Probable movement, I will tell you that what numbers, what levels, zones will trigger the bullish bearish movement. I will discuss the bullish conditions, the bearish conditions for the next week. So now first I'm going to start with the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, this is the weekly chart. Okay, so I'm going to discuss the technicals first, and here I will discuss the weekly chart, then I will discuss the daily chart. So in this manner, okay, we'll get to know the exact trend, the movement and the momentum of the stock market. Okay, so weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, one entire week. Okay, now in this case, the candle, let's first discuss the candle. This is a heavy bullish candle. Okay, why? If you notice, the body of the candle is very heavy. Okay, although it was not in the open equal to low condition, but the body of the candle was very heavy, and also the closing and the high of the candle is above the previous all-time high. All of this indicates heavy bullishness in a manner that on Monday either we will see a gap up open, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, this is what the candle is signifying. Now let's validate the same through the Dow Jones. This is the chart of the Dow Jones. Here in case of the Dow Jones, the weekly candle, very heavy weekly candle. Okay, other than that, the closing and the high of the candle are above the previous all-time high of the Dow Jones itself. Other than that, the Dow Jones for the entire week was in the open equal to low condition. Okay, so these are the three factors indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. And also for the entire week, S&P 500 will remain in a condition to sustain and to recover even if there comes any fall, just because of the heaviness, the heavy bullishness through these candles. Now let's analyze the technical indicators on the weekly chart. So technically S&P 500 is bullish, no change in that. Okay, there was a small change in the stochastic RSI. So S&P 500 is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the weekly chart. And also the S&P 500 is bullish through the stochastic RSI. Okay, last week it was bearish. There was a little change, but now because of this heavy bullishness, okay, it has again changed to bullish. The only problem is in the MACD. MACD is still trading bearish, and this is where the big problem is. Okay, why the big problem? Because as long as MACD is trading bearish, S&P 500 will remain susceptible to give a good fall, and this fall will not be like a slow or something. It will be a surprise fall, surprise or sudden fall, as long as it is trading bearish. Okay, and this is also creating a problem to the S&P 500 in achieving the 7,000 target. Okay, and once this becomes the MACD changes to bullish, and then stochastic RSI is also bullish, then it will come into the condition wherein these technicals will force the S&P 500 to move up and to achieve the 7,000 and to move within the 7,000 range, and will counter the bearishness that might be there because of economic data or because of the earnings. Okay, so this is the power of the technical, especially the MACD and the stochastic RSI. As of now, the S&P 500 is neither overbought nor saturated. So in this manner, the S&P 500 is 80% bullish on the weekly chart. This means that the long-term trend is still bullish. Okay, now let's analyze the Dow Jones. Dow Jones is almost the same. It is bullish through the Bollinger Bands, through the moving averages, Ichimoku cloud on the weekly chart. And the Dow Jones is, yes, now the Dow Jones is bullish through the MACD as well as through the stochastic RSI. This is a perfect combination. This is a good combination that is going to help the Dow Jones to move up further. Okay, and when the Dow Jones moves up, then this will help the S&P 500 to move up. And even if the S&P 500 fails to move up, then also because of the bullishness of the Dow Jones, S&P 500 will not give up, rather it will sustain. Okay, so this is how the Dow Jones is going to help. The Dow Jones is neither overbought nor saturated. However, we are expecting an early saturation. If the Dow Jones goes bullish, it remains bullish and trades bullish. Okay, in this manner, the Dow Jones is 100% absolute bullish on the weekly chart. This means that the long-term trend is still bullish. There is no change in the long-term trend in both of these cases, in the S&P 500 and in the Dow Jones. The only problem in the S&P 500 is the bearish MACD. Okay, because this can trigger the sudden and sharp fall. Otherwise, everything is good on the weekly chart. Now let's analyze the daily chart, because daily charts will tell us what is expected to happen like on Monday, Tuesday, Wednesday. Okay, in this the short term. So guys, this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. So guys, before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. So now let's first discuss the candle. Again, a good bullish candle. And the closing of this candle is above the previous all-time high, and also above this the candle that was formed on 7th of January, and the high was 6965, whereas the last closing is 6966. So the closing of this candle and the high of this candle are above the previous candles, all candles historically. Okay, this is indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. Okay, a very heavy bullish condition, right? Now let's analyze the Dow Jones to confirm, okay, if it is also indicating the same. While on the daily chart, this is not the case, because the Dow Jones on the daily chart has given a limited bullish candle, okay, and the closing and the high of the candle are below the all-time high of the Dow Jones. So it is simply indicating an initial or intraday bullish movement, but no gap up open, nothing. Okay, just an initial or intraday bullish movement. Now the good thing is that on the weekly chart and also on the daily charts, okay, we are seeing the same pattern, the same thing. This means that on Monday, a gap up open in the market. So when I say the market, okay, this includes the S&P 500, Dow Jones, Nasdaq, or an initial or intraday bullish movement on Monday. Okay, this is through the candles. Now let's analyze the technicals. Through the technicals, the S&P 500 is bullish through the moving averages, bullish through the Ichimoku cloud, bullish through the Bollinger Bands on the daily chart, and the S&P 500 is bullish through the MACD and is bullish through the stochastic RSI on the daily chart. Now what you can see here is that on Friday, S&P 5, the MACD, okay, it changed to bearish, right? Then because of the heavy push on Monday and Tuesday, the technicals were forced or compelled to change the direction to bullish, so that the S&P 500 and the market can sustain and can remain bullish. That is why on Monday in my updates and also on Tuesday, I've mentioned this thing to my Patreon community members, that the S&P 500 is pushed to remain bullish, so that the MACD and the stochastic RSI can change to bullish and can sustain bullish, so that the entire week will remain bullish. On Monday itself, I mentioned that under these conditions, we will expect the bullish week. And we have seen that for the entire week, okay, the S&P 500 and the market sustained bullish because of the conditions seen on Monday. Okay, so in this manner, the S&P 500 is 100% absolute bullish, neither saturated nor overbought. Okay, let's analyze the daily chart of the Dow Jones to confirm. While Dow Jones is also the same, it is bullish through the Ichimoku cloud, Bollinger Bands, and the moving averages on the daily chart. It is also bullish through the MACD, but is bearish through the stochastic RSI. Okay, neither overbought nor saturated. So Dow Jones is 80% bullish on the daily chart. 80% bullish on the daily chart. So now what we have seen is that on the weekly chart, okay, 80% or 100% bullish. On the daily chart, 80% or 100% bullish. This means that the short term and the long term trend are bullish. Okay, short term and long term trends are bullish, no doubt about that. Okay, but this the short term and long term bullish trend does not mean that the market cannot come down, it cannot fall. No, that is not the case. Bullish means that irrespective of anything, it will move up. For example, if it comes down, then also it will move up, means it will be able to recover. That is the bullishness. Okay, there will be red candles, okay, there will be some fall, but that will be recoverable and it will remain in the bull side. Okay, this is the bullishness. And in my previous S&P 500 weekly technical analysis, and also in the previous mid-week update, this was a recent mid-week update. Okay, so here I have repeatedly mentioned that before the S&P 500 moves to the 7,000, okay, it will move up, come down, move up, come down, move up, come down. It will form a staircase pattern. Okay, why? Because it is heading to the 7,000 psychological level and it is too fast. It is achieving 7,000 too fast. Historically, okay, such a condition, such thing, like in 150 years of history of the S&P 500, we have not seen this kind of movement, this kind of achievement in the S&P 500. This is why it will take 4, 5, 6, 7 trials, up down, and then only S&P 500 will be able to move up and will be able to achieve the 7,000. Okay, after a lot of hesitation, and the same we have seen through the charts. So now guys, before I discuss the probable movement, which is the next section, the probable movement, I have this information to share with you, that if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. And it is not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give the opportunities in the premium stocks of the stock market, and I gave 50 to 80 opportunities in the premium stocks and the ETFs. And that's not all, because I also gave the midweek update. This midweek update is a video technical analysis. Generally or mostly it is given every Wednesday. So guys, whenever you want to join my Patreon community in order to get these daily precise updates and the opportunities in the premium stocks and the midweek update video technical analysis, then I've given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says membership options. And when you click on this button which says membership options, then you will see these three tiers: tier 1, tier 2 and tier 3. Tier 1 and 2 are same. The only difference is the geographical location. In tier 3, you will get whatever you are going to get in tier 1 and tier 2. And the opportunity is 50 to 80 every month. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates in the S&P 500, Dow Jones, Nasdaq every day from Monday through Friday, as well as the opportunities in the premium update, premium stocks and the ETFs, and also the midweek update video technical analysis. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the second point of the agenda. Second point of the agenda is the probable movement of the S&P 500, means what is expected to happen in the S&P 500 and in a manner in the entire market in the coming week, the week of January 12th, means from January 12th, which is Monday, to January 16th, that will be Friday. So first thing first, in the next week, okay, the earnings season, okay, it will begin, it will start, and JP Morgan, okay, on Tuesday will post the earnings and it will start the earnings season. So JP Morgan, okay, is one of the primes in the Dow Jones, but it doesn't have that much of weight, okay, to push the Dow Jones up or down. So that is why its impact is expected to be limited. However, on the same day, on Tuesday, okay, the inflation data will be released. Now, inflation data, we all know that inflation data has the potential to help the S&P 500 and the stock market to move up heavily or to come down heavily. Okay, so on Tuesday, this will be very much clear that how soon S&P 500 is going to achieve the 7,000. Whether it will come under pressure and will give up one more time and then to move up again, okay, or it will simply move up and then, okay, it will come down. So Tuesday is same, Tuesday is this. Okay, if there comes no significant movement on Tuesday, okay, then Wednesday, the Bank of America, okay, will post the earnings. Citibank also will post the earnings, but we are not expecting any heavy movement in the market because of that. Thursday, the Goldman Sachs, okay, because Goldman Sachs is the prime, is the top contributor to the Dow Jones and is the heavyweight in the Dow Jones, it has the potential to push the Dow Jones up or down. And we have seen that when the Dow Jones, okay, when it moved up Dow Jones, okay, on Monday and Tuesday, then it was primarily because of the Goldman Sachs, primarily. Okay, that is why on Tuesday when the Goldman Sachs will post the earnings, okay, then we will see whether the entire market is going to remain bullish for some more time. Some more time means until Friday, because this will be Thursday earnings, okay, or not. But what we know is that if the S&P 500 fails to hit the 7,000 by Thursday, okay, then we will have to wait for one more week, because then there will be very limited chances that it will be able to hit the 7,000 in next 3 to 4 days, okay, and then in that case we'll have to wait for one more week. Okay, that will be the next week, means a week of January 19th or the week of the FOMC. Okay, then only we can expect the S&P 500 to hit the 7,000. Okay, now, so this was through the data and the earnings, but what we know is that through the numbers it is very clear, very much clear, okay, that as long as S&P 500 is holding, sustaining and giving closings daily closings above the 695x level, this my calculated level, S&P 500 will remain in a condition to try and test the 7,000. This is the only condition, okay, that technical or this the numbers, okay, through the numbers we know. This means that it doesn't matter, okay, what the earnings are, okay, or what the data is, but the 695x is what matters. 695x will help the S&P 500 to move towards the 7,000. This is the only and the only condition. That is why repeatedly in the previous week I mentioned 695x for everything. For the bullishness to happen, the 695x is a compulsion. This must happen, and that was the reason why the Dow Jones and the S&P 500 failed on Wednesday, because the Dow Jones breached the very heavy resistance level. That was the one thing, and at the same time the S&P 500 hit the 695x for the very first time, and that is why this was clear that first it will have to struggle, it will have to show hesitation, okay, and then it has to come down. So these were the two reasons why we have seen a good fall, a heavy fall intraday, 1%, almost 1% fall intraday on Wednesday. So it is very much clear, 6.9 without the help of the 6.9, okay, 7,000 is not possible, not possible at all. Okay, and if you think that or if you're thinking that, okay, that without the help of 695x S&P 500 will be able to move up, will hit the 7,000, will retrace back, no, that is not possible. Okay, we need continuous hourly closings, continuous 4-hourly closings, continuous daily closings above the 695x. That is the only and the only known condition. Now there comes a problem. Problem is that in the 698x, okay, there is my level, and also through the calculations there is one more level, okay. These two are creating a small resistance zone in the 698x and will trigger a fall. This fall will be there for intraday, okay, at least intraday this will be there, means we will see a red candle, maybe like this, okay, a red candle, okay, when it hits, okay, the 698x range. There is a heavy resistance zone created by both of these the conditions, okay. But when it moves up, okay, means it sustains above hourly, daily closings, above the 695x, moves into the 698x, comes down, then that fall will be handled by the 695x. Okay, now 695x will handle the fall for 1 or 2 hours or more than that, depending on the momentum. Okay, however, if the S&P 500 fails to hold at the 695x level in that case and gives back to back at least 2 consecutive hourly closings below 695x, then this will trigger a fall, something like, yes, this kind of fall, means again it will form a staircase pattern and it will move up. It is coming down, then it will move up. Okay, so again and again hesitation to move to the 7,000, that will be seen. So first is the 695x, then we are expecting an intraday fall in the 698x. Even if there comes a little breach of 698x, then also it doesn't matter, because eventually we are expecting a fall. Okay, yes, there is a condition. Condition means that S&P 500 moves up, okay, hits the 7,000 within a day. So let's say it is sustaining at the 695x, okay, closing above the 695x. Intraday it moves up, because from the 695x it will be like 0 point how much, 0.5%, okay, the 7,000, okay, just the 0 point or 0.6% from here, okay. So this means that in this scenario it moves up, breaches the 698x, doesn't fall, doesn't come down from the 698x, rather moves up, enters into the 699x and is very near to the 7,000, okay, we will see a sudden fall. Why? Two factors. First of all, it disrespected the 698x, because from here it has to give intraday fall, okay. So this must be there, okay. It has disrespected. Secondly, it has entered into the 699x and is very close to the 7,000. There will be the fear, a natural fear in the stock market, okay. Why the 7,000 is there, okay. Now the people will try to book their profits, okay, because they know that as soon as it touch or hit, okay, we will see the fall. Now what if the S&P 500 hits the 7,000? Then what will happen? Now once the S&P 500 hits the 7,000, okay, then the most important part is the closing. The closing must be within the 7,000 range, this closing, okay, because if it moves up, hits the 7,000, okay, achieves the 7,000 target, but closes below the 7,000, then again this will trigger a fall like this, okay. This will be a short-term fall for 2, 3 or 4 days, okay, and then again it will come into the condition to move up. But if there comes a closing within the 7,000 range, okay, then this can help the S&P 500 to move up and to remain and to trade within the 7,000 range, rather than coming into this condition. See, S&P 500 will come into this condition or this condition, okay. So it doesn't matter whether it has hit the 7,000 or not, it will come into this condition. But in this case, there is a very small zone and very heavy zone, okay, from where we are expecting a fall in the S&P 500, okay, means for around 1 to 2 weeks of fall in the S&P 500. This is within the 7,000 range, okay, before the 7,100, okay. Between 7,000 and 7,100 there is a very small there is the zone, very heavy resistance zone. We are expecting a fall for 1 to 2 weeks, okay, a short-term bearish cycle. But for all of this to happen, S&P 500 at first must enter into the 7,000, must close within the 7,000 range, okay, at least 2 consecutive closings within the 7,000 range, then only this will be possible. If it comes down before hitting this the small heavy resistance zone, then that fall will be limited only for 2, 3 or 4 days, and again it will move up in the 7,000. There will not be this the short-term bearish reversal for 1 to 2 weeks unless it hits this the heavy zone. Whatever fall is there, that fall before hitting this the heavy resistance zone will be very limited for 2, 3 days, 4 days, 5 days, but not the short-term bearish cycle, the short-term bearish movement. That will not be there. So the 7,000 case is clear here, okay. So these are the two conditions, 695x and the small zone in the 698x, okay. That is the condition. Now okay, you must see, okay, this case here on Monday S&P 500 gave a surprisingly it gave a gap up open and it closed within the 6,900 range on Monday, and there was some suspicion on Monday, okay. Why? Because the S&P 500 was struggling at this the resistance zone, okay, in the 691x. However, because it has gained and then it was trading around the zone, so there was some probability that the S&P 500 can close above the 6,900, because it was expected to trade in between the 6,900 and the 691x, this is the zone, and because of that it was expected to close above the 6,900. and confirmed that for the rest of the week the S&P 500 will remain bullish. Okay. Now in the similar manner, when the S&P 500 moves up, enters into the 7,000, okay, then it will move in between the 7,000 and a level, not the zone but a level. Okay, then it will remain, and based on the conditions, if the hourly closings are seen above the 7,000, just like what we have seen on Monday. So Monday it was clear that this will be the condition. Because of this condition we have seen the bullish week, otherwise this was not possible. Okay, then we will see this kind of movement condition in the 7,000, right? However, if you see here on this was Thursday the S&P 500 opened within the 6,900, not a problem. Okay, because from Tuesday onwards all of the opens were within the 6,900, but on Thursday, okay, it came down and the low was 6,899.33. It breached the 6,900, but still managed to close above the zone in the 691x. And why I am discussing that again for the 7,000? Okay, see what happened in this case is that in the pre-market analysis and the first update, okay, on Thursday, I mentioned to my Patreon community members that there are chances that the S&P 500 can lose the 6,900. Okay, but as long as this loss is within the 689x, okay, and is recovered within a few minutes, okay, at most like 15 to 20 minutes, it will remain and sustain bullish and will give the closing within the 6,900 range. Okay, that is why we were expecting the S&P 500 to trade in between the 6,900 and the 694x, okay, the previous all-time high, and the 691x zone will act as the tiebreaker, and it spent most of its time after recovering from 6,900. This means that when it reaches to the 7,000, okay, trading in the 7,000, and there comes a little breach, a little loss of the 7,000, okay, then that loss must be in the 699x only, and this loss must be recovered within the minutes, within few minutes, like at most 15 to 20 minutes, just like what the S&P 500 did on Thursday. That was the reason why it closed above the 691x and triggered heavy bullishness. So in this manner, okay, the 7,000, so 7,000 is heavily conditional. Okay, primary condition is this. Now what if the S&P 500 fails to sustain? What if there comes a fall because of the earnings, because of the data, okay, or if there comes closings, hourly closings below the 695x, and then that triggers the daily closing below the 695x, then what will happen? In that case, there will be a short-term cycle, short-term fall, just like what we have seen here. Now, before I discuss this, the cycle, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. So when I say this, the bearish cycle, okay, I mean, so see, this will be triggered when? This will be triggered only and only when there comes continuous hourly closings below 695x, 4 hourly closings below 695x, and the daily closing below the 695x, then only this will be triggered. Okay, now when this happens, then what? Then where it will be coming down to? It will be coming down to, and okay, see, before that, you must understand this fall can happen anytime. It can happen from the 695x itself, from the 696x, 697x, otherwise the 698x, okay, the small zone that I have discussed. Okay, if not, then from 699x, okay, or when it hits the 7,000, okay, then we can see that fall to happen, right? So whenever this fall happens, then this fall happen in this manner, where the hourly closings, 4 hourly closings, and the daily closings are below the 695x. When that happens, then again comes into the picture 691x zone. This very small zone is so heavy that this can either help the S&P 500 to sustain and to retry for the 7,000, or can trigger heavy fall in the 7,000, in the 6,800 or in the 6,700 range. Okay, so a fall from 695x will be handled initially, irrespective of the nature of the fall, it will be handled by the 691x. This is what we know. Okay, it will be handled by the 691x for 2 to 4 hours. Okay, not for the entire day. If the fall is very heavy, then also for 2 to 4 hours it will be able to handle the fall. If the momentum is low, less, then for the entire day it will able to handle the fall. The closing will be above. Now comes the closing. As long as the closings are above the 691x, fine, perfectly fine. Okay, because as long as the closings are above the 691x, the S&P 500 will remain in a condition to recapture, to recover the 695x level. Okay, 695x, and 695x is what? 695x is the primary condition for the 7000. Okay, so as long as the closings are above this zone, 691x zone, S&P 500 will remain in a condition to recover the 695x, and then the conditions of the 695x will be applicable. Okay, then 698x, a zone, small zone, then comes the 7000. Okay, so in this manner a fall. Now this can happen within a day, this can take like 2 days or 3 days. Okay, now problem, the real problem or the bearish conditions, okay, will come into the picture. Okay, when the S&P 500 fails to hold at 691x, gives the hourly closings below 691x, continuous 4 hourly closings below, and the daily closing below 691x, that will then trigger the fall. But still the fall, the bearish pressure will be there. This pressure will be very heavy, but still this will not be enough to trigger very heavy fall in the market, because the 6,900 psychological level is there. And what we have seen since Monday, 1 2 3 4 5, 8 has sustained and given the daily closings above the 6,900. So below 6,900, 691x zone, 6,900 will hold. S&P 500 will hesitate to lose the 6,900. Okay, so I think on Thursday, okay, on Wednesday or Thursday, okay, then repeated on Friday, I mentioned this to my Patreon community members that as long as S&P 500 is holding, sustaining, okay, giving closings above the 695x, any fall, irrespective of the reason, okay, will remain restricted to the 6,900 range. Okay, that is why the 6,900 means before it actually hits or tests the 7,000. Okay, so this means 6,900 now is in a condition, okay, to hold the fall, or the S&P 500 will hesitate. On Thursday, S&P 500 breached the 6,900, okay, and it was 6899.33, right, but recovered instantly. So in a similar manner, the 6,900 after 691x will be there. Okay, a fall. Even see, there will be the pressure, very heavy pressure on the market after losing 691x. There will be very heavy bearish pressure. Okay, but still the 6,900, as long as the movement is in between 6,900 and 691x. Okay, S&P 500 will remain recoverable, will remain in a condition to sustain. So I have again and again repeated this, the concept, repeated this, the fact. This means that even though there will be the bearish pressure, that pressure will be countered. That pressure will be countered, okay, countered as long as it is holding above the 6,900. Once the 6,900 is lost, consecutive hourly closings below the 6,900, it is lost. Then the short-term bearish cycle. Short-term bearish cycle means just like this one, for 4 or 5 days, this bearish cycle will start. Okay, this will then trigger the fall, but that fall will remain within the 6,800 range, and then it will come down, and then there will be the recovery. Okay, in the from the 6,800 range. But question is that in the 6,800 range, okay, to what level it will be coming down? It will be the 685x, the known heavy support level. Okay. Earlier there was the obligation to the 4x/5x, 684x/5x, but that obligation is now fulfilled. So 685x level is in a condition to hold the fall. Okay, and if the momentum is heavy, bearish momentum is heavy, or if the pressure is heavy, then the 4x 5x will be able to hold that, the fall, the pressure, and then a recovery from here to what? Recovery, at first the recovery of the 6900, then the recovery of the 691x zone, then the recovery of the 695x, and then comes into the condition for the 7000. So in this manner, we are expecting like the 6800 range, 6900 range, and the 7000 itself. Okay, people have asked this question again and again of the AI bubble. Okay, so again and again repeatedly I mentioned that AI bubble is there. In 2026 we are expecting the AI bubble to burst. Okay, but as of now no one knows exactly when, the date and the time, okay, or the day when this bubble will burst. No one knows. Okay, the conditions for the bubble burst are, you can say, is the FOMC events. Okay, FOMC events have the potential to trigger, okay, this kind of heavy fall, that can trigger this. But as long as the fall, any fall, as long as the fall is limited to the 10% in the S&P 500, is not more than 10%, the bubble will not burst. Okay, if the fall is like 8%, 9%, that is fine, perfectly fine. That will give you an opportunity to buy. Okay, go bullish. But if the fall is more than 10%, then the bubble, there will be chances that bubble is going to burst. And once it crosses the 20% mark, the correction mark, okay, then most likely 90% chances that the bubble is going to burst, and we will expect 50 to 60% fall. Okay, which is generally, okay, what happens during the bubble burst. Okay, 50 to 60% fall in the index in all of these indices that will be there. Okay, but as of now we are not expecting this kind of fall, this kind of bubble burst. Okay, and especially when the earnings season is there. Okay, this is January, and companies are going to post the earnings for the previous quarter, and earnings season mostly more than 80% of the times earnings season remains bullish, goes bullish. Okay, that is why the chances of the bubble burst, okay, in this month are not there. You can say like less than 1%. It is expected to remain like this. Whatever fall will be there, it will be normal, okay, limited, okay, recoverable, and 7000 is most likely, but still it cannot be confirmed, but it is most likely to happen. If not in the coming week, then in the next to next week. But guys, whatever will happen, I will keep you posted through these daily precise updates, which I give to my Patreon community members. So if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And please subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.